everyone. Good evening. This is Startup Central with me, Amanda Bash. The show focused on new age tech, disruption, entrepreneurship, and all things to do with startups. Well, today on the show, we've got two voices joining in. We'll be joined by the OG of the startup world. That's none other than Sanjeev Bikhchandani, the co-founder of InfoEdge, talking about the expectations from startups on the budget, as well as the outlook for the startup ecosystem. That, and we've also got VVFE India. They've raised $75 million in their latest fundraise round. We'll get a view from the management. But first up, take a look at your top stories in the startup universe. Let me bring on board then Mr. Sanjeev Bikhchandani, who is the co-founder at InfoEdge, here to talk a little bit more about what the outlook is for the startup ecosystem, expectations from the union budget, what the views are on recent companies listing, valuations, as well as the road ahead with AI taking center stage. Mr. Bikhchandani, good to have you on board. I want to start off then by talking about the Amrit Kaal of Azadi, the fact that the government has spoken about how the greatest expectations in the years ahead is going to rest on the youth. What are your thoughts?
India is a young country. Look at our demographics. It is also true that if you, in my area of operation, that is entrepreneurship and startups, many of the startups are done by young people, younger than 30, younger than 35. And it is those startups that will be giant companies of tomorrow. And that is what will take India ahead. So I completely agree that, it is the youth who are central to India's progress.
Would there be some sort of a wish list when it comes to the startup ecosystem? Because yes, there has been a lot of government support for the startup ecosystem, be it, the ease of starting a business in India, easing regulations, as well as access to newer technologies. But what more do you believe that the government needs to do?
Look, policy pronouncements from the government come through the year, not just the budget. But, budget is one more occasion to do stuff. So we are hoping that, the angel tax gets eased out. We are hoping that there is some sort of incentive for investors to invest in VC funds and startups. And there, because really what we need is the domestic venture capital industry, domestic investments into startups, risk capital, that gets a fillip. So stuff in this area would be useful.
Do you think that strategic budget allocation will play a strategic role, maybe streamlining of IPO processes to boost investor confidence? Is that something that you would like to see in the budget, Mr. Bikhchandani?
Look, I think the IPO processes are fairly streamlined, and we have seen a number of IPOs in the last 2 or 3 years from new age tech companies. Now, several of them are doing well, some of them are not. But that's a market condition. So I'm not sure we need any change in the domestic IPO processes at all. Already we are seeing that those who have flipped to go overseas are finding they can't list overseas. Many of them are coming back to India to list. They want to flip back. Maybe if flipping back could be made easier, I think that would help a lot, because a number of people who flipped overseas want to flip back, but there are the tax implications of that are fairly onerous. So if something is done around there, we can launch some sort of Ghar Wapsi scheme to get flipped startups back home.
You've gone ahead and said that there is no funding winter when it comes to good companies, and there never was. So how would you read into the overall sentiment in the startup ecosystem right now?
I think 2024 will be more of the same. Investors are more discerning. Investors are more cautious. Investors are taking their time. Investors are evaluating things thoroughly before investing. Valuations are more real. And the velocity of investments has slowed down, but investments continue. So really, you've got to get your company into a position where investors want to invest. And for that, you've got to focus on cash flow, revenue, profit, repeat business, execution rather than overspending. Those are all the conventional businesses, the way conventional businesses are run. You've got to migrate to that.
You know, given that you were one of the early investors into Zomato, what's your thoughts on how the company has shaped up, especially in light of the fact that this year we're anticipating the number 2 Swiggy to list?
I don't know the Swiggy numbers precisely. When they, I guess, file the DRHP, things will be clearer. But Swiggy is a good company, and I think we respect it. Our understanding is that it is number two to Zomato. And really, having a second listing will also help investors benchmark one and two, and that's always good.
Right, okay, so benchmarking these companies, you know, and given the fact that we have seen the cash burning cycle reduced to a great extent, companies are becoming a lot more cognizant when it comes to accountability and profitability. What's your analysis of how investors are now approaching these companies?
I think most companies now have understood, and investors have understood that whether you're listed or unlisted, eventually you will be valued of a profit multiple. And money is not unlimited, right? So if you want to get more and more rounds of money, you better be progressing towards a profit and better unit economics pretty quickly. So I think that fundamental understanding has sunk into to founders.
You know, you've gone on record to say that 4B Networks, which was the prop tech venture that was founded by Rahul Yadav, was one of the mistakes. I just want to understand from you, are there any major signals, indicators, or red flags that emerge in conversations with founders that you know that it is going to potentially be a problem?
The importance of good governance has been re-emphasized. We have always stood for it. We have always been very careful. You do make mistakes. And I have publicly acknowledged in our analyst call a couple of quarters ago that yes, investment in 4B Networks was a mistake. And we accept it and we learn and we move on.
Right, and how have you looked at the journey of Policybazaar as well since its listing, and would you be looking at any exits from some of these companies, or are you seeing strong potential for growth and you're going to continue to remain invested?
We have no announcement to make with regard to exits as of now. But fundamentally, if a company's got growth and if it's got value creation still left, unless we have alternate uses of capital, we have to have very good reason to exit.
You know, there was a lot of debate with the 70-hour work week, comments that were flagged off by Mr. Narayan Murthy, and the debate clearly started. Which side of the fence are you on?
No, as I had clarified in that in that interview of mine, the question was regarding startup founders and how hard would they need to work. And I had said, look, if you're doing a startup, you have to be totally committed 24/7 because that's what it takes to succeed. And therefore, 70 hours to me actually look like it's less. You shouldn't do a startup if you're not totally committed, and you will have to work as hard as required. And that could be much more than 70 hours.
You know, while you did touch upon valuations, we did have a year of multiple IPOs and multiple companies that came out with their listings. How would you look at the overall valuation metric and how this has come about?
I said earlier, can you go public without being profit making? You might be able to, but investors are much more comfortable with a profitable company. Therefore, my advice to most startups who are thinking of going public is that get to profit, then go public.
And what are some of the important factors, according to you, Mr. Bikhchandani, when it comes to really building a brand and building a business?
I've always said that successful businesses are built on deep customer insights. If you're in touch with your customer, you have an insight about an unsolved problem, a need gap, and your solution in a product, handles that. Then you have a much higher chance of success. So I would go back to what I've always said, which is focus on the customer and get some insights, understand need gaps, produce a product that satisfies that, and chase customer money more than investor money.
And I understand that you're currently evaluating investments in deep tech as well as AI, and there's a fund that's focused on it.
I think most tech companies, most internet companies today have a touch of AI. So AI has gone across many companies. So you can't really look at an internet company today or a mobile app company today without having some sort of look at AI. right? Also, deep tech, however, is different. We do have a fund which is looking at that. It's a small fund. We are putting our toes in the water there. It's not a large fund, but let's see what pans out there. So these are very early bets, and they will take some time before they come to fruition.
Coming to the IT sector, I just wanted to get in your thoughts because without a doubt, it has been a year of underperformance. Do you think that we're going to come out of the woods soon?
IT services is different from early stage investing in startups. IT services has been, a little tricky this last year. We are hoping after a couple of quarters it improves. Wait and watch. As far as tech investing is concerned, once again, it's been a mixed bag. But like I said, investors have become more discerning. They're more cautious, and that's always good.
You touched upon AI, and today it's ever so relevant. We can't talk about internet companies without flagging off AI. But is there that worry or that danger looming large with it overtaking jobs, maybe?
We have to wait and watch to see what impact AI will have on a basis. Indian companies are smart. IT services companies are smart. They have smart management. They will adjust and adapt. Is our view. It might take a couple of quarters.
And given the success that we've seen for UPI, what's your outlook when it comes to ONDC? Do you think that it's likely to meet similar success?
There's one fundamental difference between ONDC and UPI. UPI essentially was information exchange. ONDC has got a logistics element to it, which makes it slightly harder. Obviously, there's a need for it, and hopefully it will do well, but let's see how it pans out. We're still waiting and watching.
Right, Mr. Bikhchandani, any specific sectors or industries that you believe are poised for significant disruption or innovation in the coming years?
So we don't examine sectors and we don't examine, industries. We examine companies, and that's how we invest. So we just meet 1,000 startups every quarter, or we at least look at 1,000 startups every quarter, and then we figure out what's bubbling from underneath, and then we pick companies. So we are in the business of picking companies, not sectors. And yes, something may get disrupted, but we'll probably find out only afterwards.
Cryptocurrencies, what's the view? Yay or nay?
I have always been personally skeptical of crypto. I don't understand how a currency can survive without sovereign backing or a sovereign guarantee. And therefore, we did not do any crypto investments.
And before we let you go, then, wanted to get in some thoughts as to how you see the overall startup ecosystem panning out for the year ahead.
The investment will continue. I think the dust is settling. I think founders are getting clearer and clearer, or rather, they're absolutely clear they have to get to profit. Some will be able to do it, some may not. And it'll be men from boys.
We'll take a very quick break. Don't go anywhere. When we return, we'll be connecting with the management of Vivi India Finance to talk about their $75 million fundraise.